Welcome back, cool cats. Today we are keeping things super simple because it has been a very long week. As I pointed out in my last video, we had this falling wedge that was forming on the market on the ADD that was signaling that we were likely to have a big breakout on the overall market. And as you can see, on Friday we had about a 4-point move up, very strong impulsive move up. And we'll get into it here in a little bit, but that may not be the end of that move. But finishing up with the ADD, what do we see here right into the end of the day on Friday? We formed an itty bitty rising wedge. So I wouldn't be surprised to see a pullback on Monday, possibly followed by a continuation to the upside. As far as SPY and QQQ go. Taking a look at Dixie, the dollar strength index, we pointed out this falling wedge before, and this blue line here is the measured move. This is the pattern target up here for that big falling wedge. It's somewhere around 103.30. And like I pointed out in the last video, I'm very curious to see if Dixie finally meets that pattern target and then begins a sell-off. And one of the things I really want to point out is the divergences that we're seeing on this. So right now, we've made a higher high between these two, but on the RSI, we've made a lower high. So that bearish divergence played out a little bit. We've also got what is considered a hidden bullish divergence. We made a slightly lower low on the RSI, but we've made a higher low on the actual chart. And typically the way that these things play out is you do get another bullish wave up, followed by, you guessed it, a sell-off. My guess is that in the coming days and weeks, we may go back and retest some of these fair value gaps. Like here on the 4th, we had a kind of like just a straight up momentum. We may try to fill that gap. And that also happens to be a pretty key support level right around 102 even. We're going to get into the market updates for SPY and QQQ, but first I want to revisit TLT because there's something that I noticed on it that I hadn't before. It's a little bit ugly, but if you look at this, we've got a bit of a head and shoulders pattern. This was the neckline. If we take a measured move from top to bottom and we drag it over here, we're getting a target, if this is a valid head and shoulders pattern, of TLT coming down to somewhere around 92.80. But like I frequently say, if a pattern has a target that is just beyond a very strong main support line, like what we've got going on here on TLT, and I want to show this to you, just how far back this goes. This main support line here in orange goes all the way back to October 23rd of 2023. And the way that I've drawn this is including extended hours trading. So if it doesn't look like it's a line of best fit, we'll just switch over to the 4-hour time frame. But look, every single time that we've hit it, we've had a very strong bounce. So it's so crucial that we stay at or above it right now. As you can see, we had some small wicks below, but the buyers always stepped in and then pushed it higher. And throwing up our indicators, we can see that we are basically right at this weekly support on the Ichimoku cloud. We are hovering right around the 50-week moving average. And as I frequently discuss, the end of big impulsive moves always end in a reversal pattern. So the fact that we're forming this falling wedge into this main support line really kind of makes you wonder if this is where we're going to get our big bounce. However, the weekly RSI actually does have further to move to the downside and form some form of bullish divergence, as well as far as the weekly Bollinger Bands go, this could come all the way down to about 89.60. If we're looking at key levels, the next real key level is right around 87.40, and then the next one would be around 82 even. But I'm holding out hope that this is actually where we're going to get our next big bounce. And I'm looking at the RSI. It's got a bit of a falling wedge RSI pattern here, outlined in yellow. And this has gotten as low as about 13, maybe 13 to 14 on the RSI. And we can see every single time that we got there, at the very least, we got a dead cat bounce. And then following that, we got further moves to the upside. And this is just my personal belief, but I think the Fed is going to be cutting interest rates a lot more than they think they're going to coming up soon. So real quick, before we get into the SPY and QQQ analysis, please make sure to like, share, and subscribe so that you won't miss these awesome updates every week. So look what we've got forming here. It's a mini rising wedge, but notice how it could be terminating right into this main resistance line. I think there's a possibility that we see SPY pull back on Monday somewhere around 578, give or take, and then try to push up to about 581, 582. And if this resistance line actually holds, we would anticipate seeing a pullback to somewhere around like 572. And if this triggers the much larger rising wedge pattern, again, I've covered this in previous videos, we could be looking at a target of somewhere around 546 in the coming weeks and months. And to add confluence to the fact that this really could be a shorter term rising wedge setting up, look where the pattern target has us falling to. It has us falling to basically the 10-day simple moving average, which typically tends to be kind of a decider of trends. If you're above, you're bullish. A lot of times if you're below, and especially if you get below the 21-day moving average, you're starting to get pretty bearish. And it helps, if you're going to go short, that we're also at the upper Bollinger Band right here. And I won't cover it again, but if this ends up being a symmetrical triangle pattern as it looked like it was before, then the breakout target to the upside can be seen in previous videos that I've covered. And I feel like this rising wedge on the futures is actually more pronounced. So we could potentially see ES come to somewhere around like 58.93, 5900. And then we could actually get a pullback to somewhere around 57.90. And of course, our levels are different between SPY and QQQ, but on QQQ, the same resistance line is potentially in play. We could see QQQ come up to around 498.20, give or take, and then potentially pull back to somewhere around 486.50, give or take. Are we seeing the same thing on QQQ? We're close. So the upper Bollinger Band on QQQ tomorrow is going to be somewhere around 496, give or take, and then the 10-day simple moving average is going to be around 487. So at least just looking at the charts, it looks like QQQ has just a little bit more room to move to the upside before it would roll over. And of course, the levels on the NASDAQ futures would be somewhere around 20,800, and then we could see a pullback to somewhere around 20,200. Again, we want to keep in mind the symmetrical triangle pattern that's set up on the market weeks ago and all of those pattern targets that I covered, because there's the definite possibility that it's still in play. As you may or may not know, a lot of companies are going to be reporting earnings soon, and that puts them in a buyback blackout window where they can't buy back their own shares. A lot of times that leads to a lot more market volatility, and you're more likely to see dips in the market because the companies aren't buying back their own shares. So there's honestly not a whole lot of economic catalysts that are happening this week. We've got some FOMC members that are going to be speaking. That's going to be both on Monday and Tuesday. Nothing really eventful going on Wednesday. Then when we get to Thursday, we've got some potentially market-moving catalysts. We've got the Eurozone CPI coming out, which could potentially affect the Dixie, as well as the European Central Bank's interest rate decision, which again could absolutely affect the dollar strength. And if the dollar gets really strong, that's not typically very good for equities. And then as far as U.S. catalysts, of course, we've got initial jobless claims, we've got core retail sales. There's really nothing here that I see that's going to be very market moving, although the market can always surprise. And then something that the world might really be looking at is Chinese GDP for the third quarter. Considering all the stimulus that they just pumped out, I'm curious if any of that's going to trickle into that, or if we're not going to see that until the fourth quarter. And then on Friday, we've got a few more FOMC members that are speaking, and there's really nothing like market moving on Friday either, as far as economic catalysts go. However, what we are lacking in economic catalyst, the market is more than making up for in earnings reports. So on Tuesday, we've got some pretty big names: United Health, Johnson & Johnson, Bank of America, Goldman Sachs, Citigroup, and PNC Financial, all reporting earnings. Then up on Wednesday, we've got ASML. That's going to be very important for semiconductors. And then Morgan Stanley for financials, as well as US Bancorp. Then on Thursday, another big name, Taiwan Semiconductor, Netflix, Blackstone. Friday, we've got kind of a staple, Procter & Gamble, American Express. So there's plenty to add to market volatility and for the market to kind of get an idea. Did the Fed's rate cuts do anything? Are there any changes that are actually occurring out in the markets? If you love these weekly updates, please make sure to show your support by liking, sharing, and subscribing. Again, everything that I say is not financial advice, and I want to wish everybody best of luck this trading week. And I will leave you with today's trading rule to live by.